What's up, everybody? Welcome to the first part of my crypto series, where I'm gonna go over the market patterns. So I have a little laser pointer here. It's gonna help me show you guys what I'm talking. So just quickly, I'm not gonna go over all of these because some of them are just like they're just bullshit. Like this rising wedge is literally just an ascending triangle, just sort of different. You can kind of just apply some of the things I'm going to talk about these other similar shapes, and you'll come to the conclusion, right? So just to preface, be careful. Patterns honestly do not mean shit. A lot of times they don't mean anything. They could just The market makers could just be making this pattern in order to make you think that that's what's happening, and then they'll fuck you over because they know that a lot of these retail traders think like this. So don't use these as your own soul. Like, don't breakout trade because you're gonna lose. You're gonna lose in the long run. They're completely non-reliable. They're garbage on their own, and they should only be used as conjunction with your other methods, your other trading, like resistance lines and your volume and all of that shit. But other than that, do not just like draw lines on the graph because they're not magic. They're lines on your graph, on your chart, not on anybody else's chart. And just because it's there doesn't mean that that's what's gonna happen. You got to be really careful with this shit. Okay, so I've listed some things and why they shouldn't be followed. So, for example, there's such things as false breakouts that can lead to reversals. So, for example, here we have like what, an ascending triangle. It's hitting here, here, it's almost perfect and breaks out. This is where you put your trade. You're holding it, and then maybe you'll close it here, but chances are you won't, and then it'll just go straight down and you're fucked, right? So I'm gonna talk about sort of this thing with each individual pattern. You'll see. But yeah, like I said, chart patterns aren't magic. Don't be stupid. They can maybe help you grasp the overall feeling of price action and what other traders or what like the majority of the market might be thinking. But you gotta understand that the majority of the market is what's losing, right? So you always want to think opposite of them. So if you think a retail trader is gonna set along here, you're gonna want to wait, see how it plays out, and then once you start seeing signs of a reversal, that's when you put a short in, because chances are they're gonna get fucking wrecked. All right. So like I said earlier as well, market manipulation is a thing in the crypto world, right? It's not regulated. There are market makers, there are funds, hedge funds, and exchanges where they have to make money, right? They'll make money through fees, and that's how their revenue is. But you gotta understand, they do have a lot of money in the market as well, and they're gonna want to make money off of that, right? It's player versus player, bulls versus bears. It's like this, what game theory is? I'll make a video on game theory, but it's like a game, right? It's There's people that want this to win, and it's player versus player. They all want to win, right? So you gotta always keep that in your mind. So I'm gonna talk about what market manipulation is. So it's essentially shit like this, where they know that price is gonna keep going up. So the market maker, let's say the hedge funds, are gonna want they're gonna want to set along like down here. So they'll force people out, they'll trap people, they'll sell a lot of whatever, and they'll have a limit order down here. Should price reach this limit order, then their longs get set in, and then they know people are gonna start fucking buying up the price down here, and then price is just gonna keep going back up. Maybe at around here they'll have a sell order and they'll make all of this in profit. So they happen just because of that, because they want to make money. I mean, everyone else is trading because they want to make money, right? That's what you gotta understand. When you make money, somebody else is losing. You want to be the person that's not losing. Okay? All of them are gonna be in this sort of form. How does it form? What does it mean? And what's supposed to happen? So, an ascending triangle starts from an uptrend, and it forms by hitting this resistance lines consecutively while having an ascending support line, right? So it essentially means that buyers are adding pressure and they're being more aggressive, but they're hitting an area of liquidity and sell orders. For example, on this predetermined resistance line, there's going to be people that have sell orders, right? They're going to say, okay, when price reaches here, I want to put in a short because chances are it's not gonna break through. So that's essentially what they're hitting, and they got to fill in those sell orders, completely fill them in, so then they could start actually building on top of that, if you understand what I mean. So for example, the sell orders are this empty bucket, right? The buy orders have to fill that bucket in before they can go past that bucket. That's essentially what's happening here. So in theory, what's supposed to happen is should this resistance line be broken, then price is gonna break out and keep going up. But you gotta understand that not this doesn't happen all the time. Like I said before, there's false breakouts, right? I thought I had a picture. I think it was this one actually. But yeah, false breakouts. You see, this is an ascending triangle, boom, breaks out and then goes all the way back down. Here's a real example. This is like Walgreens. I'm not really sure. I got this from Google, but I'm not exactly sure when it was, but I think it was like 2001. Yeah, here, July 14th, 2000. So here we have an ascending triangle, right? So the resistance line here, boom, ascending support, breakout. It's gonna retest, and then it kept going up, but you never know if this is gonna keep going up, right? Especially with just lines on a graph, you never actually know. So that's what you have to be careful of. So there's a few triangle patterns. So there's obviously the ascending triangle, there's the descending triangle, and then there's the symmetrical triangles, which is this. It's basically like a wedge, like essentially like a completed wedge, because a wedge will only be up to here before price breaks out, and then a triangle is when it reaches the point. Sort of like the differences between ascending and descending. It starts from an uptrend or it starts from the downtrend, and it does this shit. Basically, wherever price breaks, that's where it's gonna go, right? So a symmetrical triangle and also starts from an uptrend. It can start from a downtrend like we see here. And essentially it forms when there's like a descending resistance and price is also hitting an ascending support. So we get this symmetrical triangle shape right here. It essentially means that buyers and sellers are adding pressure and being aggressive. So doesn't necessarily mean that price is going to go up. So for example, if it starts from an uptrend and it does this, it doesn't mean price is going to go up. I don't know why this chart shows that, but it's essentially where price breaks out of is where it's going to go. That's the direction it's going to go. So should it go and break out this this support right here, price is going to keep going down. And if it breaks up here, price is going to keep going up. Doesn't really matter which direction it starts from. Like I said, bro, a lot of this shit is very useless on its own, and a lot of times it's made in such a way so that it works. Like it's kind of like something happens and then you look back and try to find out the reason why it happened. So what you'll see a lot of YouTubers do is price will already be done. Like for example, there's going to be an ascending triangle here, but price is going to be all the way over here. And then they'll go back and they'll say, well, over here we saw that there's a perfect ascending triangle, and should you trade this, you would have known that price when price broke down here was going to keep going down. Listen, that's a complete bullshit. Because I could say, should price break down here, and I had a triangle formation, I could have just said, oh, this was a double top with a leaning whatever the fuck, a leaning support resistance line. So had you known this, then price was gonna go down. But it's bullshit because price could have just kept going into this triangle, and then in hindsight, I would have said, well, it's a triangle. But that's the thing, you don't know, right? That's why you got to be really careful with these fucking chart patterns, okay? Don't listen to those other YouTubers. There's a reason why those videos have millions and millions and millions of views, and the shit that actually matters has like 1,000 views. Okay, so here's a descending triangle. Um, it's essentially the ascending triangle, but starting from a downtrend and hitting a support with a descending resistance line. So it's just from downtrend, hitting support, descending support while it's hitting a support while making lower highs in the resistance. It essentially means sellers are being aggressive and they're adding more pressure, but hitting on a liquidity of long orders, right? So, like I said, with the sellers, with the bucket, it has to fill in it. It's essentially the same thing, but this time it has to suck up all the liquidity orders, the sell orders. Um, the sell orders have to suck up all the long orders before being able to break down. So, in theory, should the support be broken, price is going to keep going down. This is a channel pattern. So it's essentially like a rectangle, but going in a direction. So this is channel up. So it starts from uptrend or downtrend. It doesn't really matter. It could be downtrend, channel up, or it can be an uptrend, channel up, channel up. And essentially, it's hitting an ascending resistance line and an ascending support line. And it essentially means that buyers are adding pressure and being aggressive, but hitting an area of ascending liquidity or sell orders. Or it could also be people moving their limit orders up. So for example, the limit order will be down here, but they realize it didn't hit it, and then price will go up and they'll think that price is going to go back down and then hit it, but it doesn't. So they move their limit orders up, 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 and price keeps like bouncing off of that. You know how I said how it has to suck all the sell orders have to suck up all the long orders, right? So if the long orders keep ascending, then the sell orders are not like the sell is not going to be able to like go back down because it keeps getting moved up. You understand what I'm saying? So if the bucket is here, but then the bucket moves up here, now price is going to have to suck up the price up here, right? And then it goes back up, and then the bucket moves up, and then it has to, you know what I'm saying? So that's essentially how this sort of pattern happens, right? It could also be looked at like an uptrend, but yeah. So should the support be broken, or I guess the resistance, that's essentially where price is gonna go. But like I said, it could break and then this retest could just go all the way up and you get fucked. So you always gotta be careful. This is a channel down. It's the same thing, just reversed. Like I said, it could start from an uptrend or a downtrend. It doesn't really matter, and it forms from hitting a descending support and descending resistance. Essentially means that sellers are adding pressure and being aggressive, but hitting an area of descending liquidity or buy orders. It could it could be like the same thing, like I said, with the limit orders being moved, just reversed. So what should happen is, should the support or resistance break, that's where price is going to go. But like you see over here, price broke down and then it went all the way back up, and then you're fucked, right? If you put a sell order here and you don't sell like down here and it goes back up and you're like, oh, it's just another retest, you're fucked. And like this is another thing, right? Someone will say like, oh, this is a perfect double bottom or a head and shoulders. And you know what it is? So I guess when you're right here, you should have just closed your sell order and you would have made whatever this is in profit. But also like looking in hindsight, should this have kept going up and down, up and down, up and down? I would have said, oh, this is a channel, a downwards channel, another channel down. So you should have already known. It's just like, sorry, it just pisses me off to look at all these videos and they're just trying to feed you bullshit, and then whatever. This is a rectangle. It's just a channel just with no direction, and starts from a downtrend or an uptrend and then forms from hitting a support and resistance line consecutively, forming a rectangle. It essentially means that buyers and sellers are adding equal pressure and hitting an area of liquidity buy and sell orders. What's supposed to happen is, should the support or the resistance break, that's where price is going to head in that direction, right? So if price broke down here, it's going to go down. If it broke up here, it's going to go up. Now this is like the only useful pattern. It's head and shoulder or under over, and also the reverse of this, really useful. So anyways, I search from an uptrend and it forms by creating a shoulder, the head, and then the right shoulder. It's supposed to mean that buyers are losing momentum and aggressiveness, and it signals a reversal. So some people also do this, also kind of figure this out by having three highs, and then the fourth high is lower, and that's how they know. And then they'll say this is the neckline. If price breaks down here, that's when I'll put my short. So it's like I said, what's supposed to happen is, should the support be broken, that's where price is gonna go. It almost always does. But you also got to be very careful because, like, a lot of these things in the market are fractal. So what I mean is that if there's a pattern in the big scale, there's gonna be the same pattern in the smaller scales. So in this under over head and shoulder shit, you could see that there's another shoulder, head, shoulder, shoulder, head, shoulder, shoulder, head, and then there's no right shoulder. I guess the right shoulder could technically be this or this, but it's all within itself, so it's a pattern within a pattern. So when you're looking at putting in a short, you don't want to put the short like you don't want to put the short here, for example. You'll want to put the short either here, or wait, see the right shoulder and then put the short, or see this and put the short. Or if you're setting a long in this position, which first of all, you shouldn't really be putting a long here. It's too risky because this could be the head and shoulder and price is just going to keep going down. So anyways, just be very careful. Always use this in conjunction with your other indicators, right? Don't be an idiot. That's easier said than done sometimes. So this is an inverse head and shoulders. Same shit. Starts from an uptrend, starts from a downtrend, and it forms by creating the left shoulder, head, and right shoulder, but it's inversed. It essentially means that sellers are losing momentum and aggressiveness, and it signals a reversal. Should the resistance line be broken, price is supposed to go up and reverse. So, like I said, it's the same thing. This is not that very good of an example. Like I said, patterns are always fractal. You can't really see a head and shoulder. Maybe if you change the time frame, you'll be able to see it. but this was also 1998, and the way markets move change from time to time. So yeah, anyways, this is a triple top pattern. Essentially, a head and shoulders just without the head. It's just three shoulders, I guess. It starts from an uptrend and it forms by hitting by price hitting the resistance line three times consecutively. Should price break through the support line, that's where it's gonna go. Essentially means buyers are hitting a key area of liquidity and sell orders, and it's losing momentum and aggressiveness, signaling a reversal. Should the support be broken, that's where price is gonna go. But I guess it could technically be the other way. If it breaks up here, then that's where price is gonna go. But you know what? You only use this in fucking hindsight, bro. A lot of people piss me off because listen, I'm gonna be honest with you. All the YouTubers telling you this is how you trade, they know it's bullshit, right? They know it's bullshit. And they tell you that that's how you trade because they know that if the majority of traders trade like that and they trade the opposite of that, they're gonna make the most amount of money, right? They're sort of like tricking you into believing this shit. But it could work. It could work, but if you use it with something else, right? So yeah, be careful. Anyways, this is triple bottom is the same thing. Price is hitting the support three times and then it breaks. There wasn't really like a recheck here, like a what's it called? When price breaks and a retest. I guess technically it was here, but it broke back down. But anyways, it essentially starts from a downtrend, forms by the lows consecutively reaching support three times but unable to break it. It means sellers are hitting a key area of liquidity in buy orders and they're losing momentum and aggressiveness, signaling a reversal. Should the resistance line be broken, that's where price is supposed to go up and reverse. The double top pattern, same thing as a triple top, just without the third top. Starts from an uptrend, hits a key area of liquidity and sell orders. Also means that buyers are losing control over the market. They're losing their momentum and aggressiveness. Should the neckline slash support line be broken, that's where price is going to go up. But there can always be a retest, or there can always just be a fuck you and go all the way up. I should really stop swearing. I'm gonna get. I don't make money from this, but should I grow big enough to where I will? I'm not gonna, I'm pretty sure YouTube changed their policy and now if you swear, yeah, you're screwed. But anyways, the double bottom, it's the same thing, just double bottom. This is head and shoulders actually. But yeah, that's the only thing market patterns can really help you with. It's just kind of grasping the market, the market, the emotional, you know what I mean, like what the majority of traders are thinking. But you gotta understand the majority of traders, like I said earlier, they lose, right? So you also want to keep that in your mind. But anyways, it starts from a downtrend and it forms by the lows consecutively reaching support two times but unable to break it. It means sellers are hitting a key area of liquidity in buy orders and they're losing momentum and aggressiveness, signaling a reversal. Um, Basically, should the resistance line be broken, that's where price is gonna go up. So here it breaks, retest all the way up. But this is just a left shoulder ahead, and then if you want to place a sell, you either place it here or here. Probably less risky to place it here than here because price could just fuck you like that. Once again, I swore. But anyways. So yeah, I think that's all the patterns I go over. This is really the only ones that the majority of people use. There's the bullish pennant, the bearish pennant, but they're just triangles. They're just fancy words for fucking triangles. But yeah, anyways. So what can I tell you? Like my tips, I guess, is to wait for the patterns to fully form. So don't if for example, like if we're here and at the triangles, right? If there's only two highs like this and you draw a triangle, don't expect it to complete this because you don't know that, right? The market doesn't base around you, it bases around what everyone else is thinking. Someone else or the majority of people could think this is just a double top and they'll put a sell order here and then it'll break down here, right? And you're not gonna know, right? You don't know, especially with just lines. They don't mean anything. Really, they don't mean anything if um, that's your only sort of thing you use to trade, right? So just keep that in mind, right? Only use patterns in conjunction with other indicators and signals. Like I said before, if something's going to happen in a pattern, it's going to happen because of something else. It's going to happen because of something else, not because of your lines on your chart, right? So you always want to have something else to confirm that that's what's going to happen. Don't trade breakouts because chances are you'll get destroyed, right? price may break out here, you set a long, you're holding it, and then you just get destroyed and price goes all the way down here. That happens sometimes, whatever. Maybe use them as confirmation. Also, look at what I'm emphasizing here. Wait till they fully form. Don't trade breakouts. Chances are you'll get destroyed, and maybe use them as confirmation. Be reasonable and trade smartly. The only really useful patterns is the head and shoulder, and the inverse of them work are this one and this one. But they don't work because the pattern is there. It's just it works because you know that it's losing momentum, right? This is what happens when it loses momentum. You have your confirmation would be this, right? You have this channel, so you could say that this is a channel up, price breaks down, but it could equally go up and completely destroy you. But if it makes a lower high and it starts going back down and it breaks this neckline, you know that it's reversing now. What could happen is this goes up and just keeps it makes lower highs. The chances of this going down and then breaking back up are so unlikely. This is going to be so difficult for the bulls and buyers to do, that this is just like there's a high chance that this pattern is going to fully form and go all the way back down. Anyways, other patterns you should take all with a grain of salt, and even so, always use head and shoulders with conjunction with your other indicators and your confirmations of why that's gonna happen. Okay, see you soon. Thanks for watching. Be sure to like, comment, and subscribe. I really hope you guys enjoyed this, and I cannot emphasize this shit enough. Only trade patterns in conjunction with other things, because if you don't, and if you trade breakouts, you're gonna get destroyed. All right, peace.